Artur, we're going to spend a little bit of time talking about what you see are the key deal drivers for M&A activity in the CEE region and your expectations for the future of M&A activity in the region. So let's start with that. What are your expectations of what we're going to see in the next couple of months and years?
Yeah. I think we'll continue to see the trends that we experienced in the last couple of quarters, which means transactions should be structured around following themes. I think number one would be transactions which are familiar for the existing shareholders, so transactions where shareholders will try to de-risk the execution and then implementation. So transactions around minority buyouts, effectively increasing the shareholdings, effectively maybe going into the markets when we had a minor position but we actually get comfortable and we can expand in those markets. So I think familiarity with effectively the environment is going to be key, because people would not want to kind of get a leap of faith and effectively jump into a completely new market. So I think familiar transaction. I think number two is just continuous the corporate restructuring. So that's what we've seen, several transaction parts of the companies being spun off, people looking to effectively extract synergies, maybe just do infrastructure JVs like we've seen it, for example, around the big telecoms, just to try to create synergies. I think the next step should be pretty much in the financial sector market, where we think the distribution channels should probably be the next step for people to extract synergies. Mm-hmm. And I think lastly, I think we would say are the transactions that have always made sense, and we've talked about them for years and years and years, but we haven't seen them actually materializing because we didn't have that favorable macro backdrop, I would say. So again, in the sequence, most popular, most traditional, where people effectively we know the asset, we know the market. Number two, effectively restructuring just to extract synergies, put us on a stronger foothold overall. And the third one, I think there's the blue sky when you say this actually does make sense, even if it's a landmark transformational deal, we're going to go for it because it actually does make sense.
Okay, the topic of familiarity and sort of expanding on sort of familiar relationships, that's something that has been mentioned in some of the subsequent sessions as well. What does that mean for players who are not yet involved in the market, new market entrants? Does that mean that actually for the next couple of years we're not going to see them, or is it going to take some very, very brave players, maybe players from Asia, to actually make that leap?
Yeah. That's a fair comment. I think as a starting point, obviously there will be at some type of a disadvantage, because obviously they will not be as aggressive in potentially pricing in certain synergies, growth rates. Actually their risk premia to get into this market will be relatively high. And we're actually seeing it that ultimately the winners of ongoing M&A transactions are people who have spent time, invested time over the last couple of years. So I would continue. I wouldn't discard them, because there's always a black horse or somebody who can actually just show up out of the blue and effectively be the winner. But I would think that would be rather a surprise and a kind of nice element, somebody nice to have in the process, but not effectively driving the process.
Okay. What about your expectations? Cautiously optimistic or slightly more reserved?
I would say cautiously optimistic, because as we've discussed that we have several factors which give that positive backdrop. So we have interest rates, equity markets, confidence coming back, but unfortunately that confidence and all those factors very often go against the headwinds of events, big events, Fed, elections, terrorist attacks, other situations which effectively do not get period of stability to effectively execute the deal. I mean, as you would know best, you need around 5-6 months, depends what type of deal, sometimes quicker, sometimes slower, but in general you need a couple of months of a relatively stable, not boringly stable, but effectively predictable environment. And I think if you have ups and downs, you actually might caught the board at the wrong part of the cycle, in which case everybody will say, let's just kind of wait and see.
Okay, brilliant. Artur, thank you very much for your insight there.